Hey traders, Parker here with another indicator. I'm redoing my video on the VWAP risk reward indicator just because when I looked at the video or looked at the math again, I saw everything was wrong, at least when it came to the profits anyway. Right now we're looking at TQQ. It took, even though this is not showing it, actually this bar right here, this high right here crossed back below the second deviation, which is giving you this right now. Once this bar is closed, you'll get the cloud again. But for the most part, you can see the features of the indicators. You have your stop loss. Your loss amount is actually going to be your profit in this case if you're taking it short. Your entry would be 23.69 for this candle right here. You're looking for it to break below this low right here of this previous candle. Your share amount, your first target, your second target, and those profits as well. And if it comes all the way back to VWAP, you'll get $7.29. Right now I only have $1,000. I think I have it automatically defaulted to. And I'm using the closes. So you see, and I also gave you these gray boxes. This is actually where the second deviation is. So if it does happen to, there we go. So if it does happen to cross above the second deviation, this will be another loss if you actually entered in for a short position for this. But if price actually breaks above this high right here, you'll get another long signal. So that's some of the features on the indicator. If you get a cross above or below VWAP, you'll get a longer short signal. You get if price actually crosses below this second deviation for the lower band, you'll get if it cross above. If price cross below, then above it, then you get a long position. But if price happen to cross below the low of that candle, you get a short position or a short signal. These gray arrows, I switched all that stuff up. They were pink or red, whatever color they were, but they're just showing you the price or the high of this candle is crossing back below the first deviation. Same situation here. You can see the low cross back above the first deviation. So this is what the indicator looks like if you're going short. I think if I can switch it back to SQQ, it should give me a long signal. I'm guessing because it's the antithesis of the TQQ. Well, but they're both derivatives of QQQ. So for the most part, you got your long signal here, but you're waiting for a break above. This will be your entry if you decide to take the trade, which is the max of this candle right here. But for the most part, this will be your stop loss. So your first target, if you're using $1,000, will be $3.60. $9.12 and $14.64. These targets are based off of ATR. This would be 2-to-1 risk reward. This would be 2 times ATR. This would be your stop be 1 times ATR, and this would be 5 times ATR and 8 times ATR. But if it actually came back to VWAP, let me zoom in a little more. It'll be $7.22. So, as I said before, these are the features of the indicator. You can choose the low to cross. When it says price cross up, it's basically crossing up from the second deviation, lower deviation. So normally it's going to come defaulted as the low, and this one will be defaulted as the high, but you can switch it up whichever one you want. The normal things are in the VWAP are in there. Here's your deviations. You can actually change these. So if you wanted one, just change this to one deviation, 3 deviations. This one right, your second deviations, and that's what really gives you the best signals because it price moves into an extreme low or extreme high. This right here works for your RSI and your ATR, this length right here. So overbought, oversold, the simple average. You can hide the target lines. You can hide the target bubbles as well. So we can go back into it. And for the most part, these triangles right here shows if the triangle is at the low, it means the price crossed above oversold. If the triangle is above at the high, it means RSI crossed below overbought. Excuse me. Cross above overbought. This is QQQ, and we can come over here and you can see once the high breaks above the second deviation, the cloud goes away, and then once price comes back in, the cloud comes back, and you get this red arrow for a possible short. Here's where price broke above, where RSI broke above overbought. Oh, and well, actually, price. You can come here and change any of this stuff. So you hide target lines, hide stop line, target bubbles, stop bubbles. The only thing you won't be able to hide is the entry and the number of shares for those signals. Like I said, this is for the RSI. Let's come over here. These are some of the features. You have your up signal for your first ones, your entry, target 1, target 5, target 8, your stop. And those just the lines. RSI cross up, cross overbought, oversold. You can see it right there. Your upper band 2, lower band 2, upper band 1, lower band 1. Your up signals, which are those gray ones, your VWAP, change the color of the VWAP, and the globules or the clouds, you can change those as well. So we can see right here, excuse me, that actually this stock right here, SQQ, is actually breaking down. You had a push above, but now it's actually breaking down. So if you would have actually entered in on this at this entry point, $41 with $1,000, you'd have risked $1.84 to make $3.68. This is pre-market, so the average ATR isn't that great. So it might be better off using an open market, or possibly not using the targets and just using a stop loss. But this is the indicator. The lower one that I'm using as well is my volume. You can see right here. If you're unfamiliar with my volume, this volume right here is average volume deviations. Right now I have it set to an average of 12. Anything that breaks up, volume breaks above the second deviation, which is the orange line. The first deviation is green line. And this gray line is actually the volume average. So anything that breaks above the second deviation will be yellow or white. Let's see if we can find a white one. There's a white one. But I probably need to switch stocks. Well, you can see right here, this is breaking above the second deviation. I could probably go to TQQ, and it's probably doing the exact opposite. So this is TQQ, is breaking above this, is broke above the second deviation. And let me do this. I apologize for moving around so much, but this is what I really wanted to come back to. Here's your volatility for this day. And this is what really helps you, at least in regards to the volume. So this bar broke above this bar, actually this down bar. So it's not necessarily a down bar, but I have the things painted according to the buy sell ratio, which is close minus low, and high minus close. So if the close minus the low is greater than the range between the high minus the close, then you'll get a positive candle, and opposite you'll get a negative candle. So this was stock basically was sleep right here. So you had this huge amount of volatility come in. You had buyers come in, and you can see it spiked up. And you can see how it just floundered out from there. Came back, and you could say almost like a double bottom. And you can see the volatility with this bar right here, crossing this volume right here pushing back above the second deviation. And that's why you got a white one for these ones to break above the second deviation. Bright green or bright red would be the ones to break above one deviation. And anything to cross above average, you get the light green, or you get this brick or light red or pink color. Anything that's below average, you get dark green or dark red. So, and those are the features of the indicator. If you're unfamiliar with my volume, if you're unfamiliar with my irregular bodies, that's what this triangle represents. This is a small body with a huge amount of above average volume. And the blue triangles represents big bodies on lower than average volume. So it's to help you figure out if the market makers are doing some tricks or not. And you can see right here, this up move was not substantiated, or this big bar was not substantiated by volume, because it's a big bar on low volume. And you can see the move down. You can see right here as well, this bar right here was your next one. So this complete move down right here was not substantiated by volume. This volatility, these big candles right here are not substantiated by volume. But then you get this candle right here that pushes it above. When I say it's not substantiated by volume, the ranges between these candles, these bodies, are larger than average. But volume is below average. So that whole entire move down was a fake out or a shakeout. And excuse me, and you can really help spot reversals to the down from the downside with this indicator, with the triangle, with the cyan triangles. You can see right here, you can spot reversals from the upside as well. So this is where you're down. Where really the stock really turned on this candle. In the morning, it's going to be very volatile. You can see really, you can wait the first hour, first 15 or 30 minutes to really get the direction of the stock. But for the most part, these pink dots represents VSA, volume spread analysis. So the pink dots represents volume times the spread between the high and low. So during a volatile period, so whenever that's above average, you get the pink dots. And that's what they're representing down there. So we can move over to the S&P 500 now, and this is what we're looking at. And those are the features of the volume indicator, and it's just to help you make a more reasonable decision in your trading. Is it volatile? What is the direction of volatility? So if I go here, irregular bodies. Don't worry about this. I need to take that out. But you have your irregular bodies. You have your let's see. So I actually had to go in there and change that. So here's your volatility dots. This would be the volatility for the volume times the high and low. This is the volatility body. So this would be the volatility between the max and the minimum of the candle, actually, for the body of the candle. So you can see those as well. But for the most part, it's all in a matter of helping you make a better decision about your trading when it comes to volatility. And you can see right here, this is when the stock really became volatile. You can see it just ranged in between the bands of the VWAP. And you can see how it really didn't do anything. And you can see these big moves up, or these small big these blue candles just telling you, hey, the volume, these moves are not substantiated by volume. This one, even though your VSA is pushing, is above average on this candle, you can take the trade or not take the trade, but for the most part, that's what you'll be looking at. Because you can say right here, this move is not substantiated by volume, but VSA is telling you the opposite. And even though you might be getting conflicted signals, VSA is the volatility. And even though the movement might not be this big range on this candle right here, it's not substantiated, or the big body on this candle with low volume is not substantiated. Volatility is telling you otherwise, which you got two dots back to back. So I would probably take that trade, especially coming up from the lower band. But there's tons of videos out there on VWAP and how to use it. This is just the strategy that I programmed uh, for this VWAP, really using the deviations and VWAP itself. And we can see on the spot right now, it's using the low of this candle that broke down below which broke down below the second deviation band is your entry point, and it gave you one ATR as your stop right here. But for the most part, that's these are the indicators. Right now, it's pre-market, so it's not going to give you a day volume, but that's your average volume according to 12, and your volume on this candle. And the other indicator is, well, it's not a part of the packaging, just these time reminders. You can find those on the site as well. And that's basically it. I really liked how this turned out, because once this one broke back into the band, once this high broke above the high, this candle right here gave you a new entry point. And you really, it gave you a new entry, so you could have actually rode it using your stop, the whatever stop it gave you, but actually the mid of the actual deviation bands. And that's how this separation of the cloud is. So what else I want to show you with the features? And that's pretty much it. If you haven't already, please like and subscribe. And if you have any comments or suggestions, please leave them in the comment section. And I just want to say thank you all for taking the time out, listening to what I had to say, and watching the video. I really appreciate it. I wish you all the best. Stay safe out there, and God bless.